Hello everyone, welcome to the Ichimoku hourly analysis for the S&P 500 for Wednesday, June the 1st, 2011. Well, a very bearish day today, and right from the outset we can see that we had a red-bodied candle first hour of trading. This was a bearish engulfing candle, and we can see we had a prior uptrend that consisted of about 3 or 4 candles here. The previous day's trading ended with a large green-bodied bullish candle, and the first hour of trading, the bears made very significant net progress to the downside, completely engulfing the body of the previous candle, setting the market up for a change of trend. The trend officially occurred in the second hour of trading with the candle that made a lower high and a lower low, another very large extreme red-bodied candle. That candle also interacted with the top of the cloud, and we can see that the sellers did lose some commitment as they attempted to trade into the cloud, and the cloud acted as support. The third hour of trading was an indecisive small-bodied candle, failed to rally significantly into the second hour of trading, and then the market re-established this sell-off with the bears taking control again, testing down below the cloud, offering support down around this 1321 level, but then in the last 2 hours of trading, blowing away the bottom of the cloud, failing to act as support, and then eventually finding support down around the 1314 level. A very strong area of support through here. We can see previously that this area was tested on 1, 2, 3, 4 occasions. So it's very important for the market for the opening hour of trading. If we see the market trade down below there, we could see the market significantly lower, but this is a very, very strong area, and the area extends down to roughly 1311, 1312. So for the opening hour of trading, we should be watching that region very closely. If the market does rally, we do have strong overhead resistance now, and we will need very strong upside momentum for this market to become bullish again in the big picture terms. We are bearish now because we're trading down below the cloud in big picture terms. To rally up through the cloud and break out up above, as I've said, we would need to find some very strong upside momentum to take out this very large bearish downtrend that we had over today's trading, and some decent resistance levels that coincide with that area as well, around 1330 roughly. Now the market is also trading down below the Kijun-sen and Tenkan-sen, and that gives us a market that's bearish in the medium-term and fast-term time frames. We've also almost had a crossover of the Tenkan-sen and Kijun-sen. They are at the same level. If we do see any continued bearishness in this market, then we will see that crossover, and that's occurring just above the cloud, so it's not a terribly strong signal. But this breakout down below the cloud here is a bearish signal in this market, so obviously we do need to be aware of the support. If we see the support taken out in a bearish way early, then probably a very good sell signal for the market. But watch areas above for resistance, but certainly down to 1311.